Hi everyone, it's good to see you here. I'll just wait one more minute for everyone else to jump on. But welcome and good morning. All right, cool. Let's get into it, guys. Thank you for being here. I can see some people on my screen. So good morning, Shehan, Payal, Anuj, Robert, and everyone else who's here as well. I feel hungry just looking at you, Pyle. I think is that granola or something. So good on you. All right, cool. All right, guys, let's get into it. So I'll start with a disclaimer as per usual. So by continuing on this call, you agree that any information provided by me on this call or any call is provided as general information and for general information purposes only. I've not taken your personal and financial circumstances into account when providing information. The information is not intended to any recommendation about any particular financial product or class of financial products and should not be reasonably be regarded as being intended to have such an influence. The information provided must be verified by you prior to acting or relying on the information by an independent professional advisor, including a legal, financial, or taxation advisor, and the information may not be suitable or applicable to your individual circumstances. Let me admit everyone else who is here. All right, cool. All right, well, thank you for coming, everyone, and congratulations to everyone who's bought, like I always say, bought properties over the last week. Please continue to let me know if you do by emailing me. I always love to hear about the deals. The purpose of these sessions is to support and guide you so you can get the best results from the course. So thanks for being here, or if you're watching the recording, thanks for doing so too. Of course, all my clients are welcome to attend. And if you're new to the course, welcome to any brand new members from this week or any returning members. You can see vast majority are, of course, returning. So it's always good to see you. You're most welcome to leave your cameras on if you want. These sessions happen every Tuesday at 8 a.m. Australian Eastern Standard Time, which is Brisbane time. And like I always do, before we get into it proper, I'll just share my screen and um, take you through the where the mentoring calls are recorded and archived. So let me do that now. All right, so this here first. So this is in the wrap-up section of the course after week 6. And it's very important actually because there's almost like, not almost, literally weeks or if not months worth of content here. And it's all the archive recordings. So if I scroll all the way to the bottom, so last week, we went through the most interesting suburbs over 500K across Australia for you guys to deep dive. And correspondingly, I updated the property manager, building and pest inspector reference sheets, and also the FAQ reference sheets for this quarter, which can all be found in the download section in each week of the course. Before that, we had the most interesting suburbs under 500K across Australia. So if you're new to the course or if you're returning, these hopefully will really point you in the right direction, steer you in the right direction, and help you build your confidence so that your own analysis is validated or vice versa. Before that, we had one of our members, Praveen Kalabe, share how he changed his belief systems and bought a high yield property in Mackay. Before that, we had an update on the current state of the home loan market with one of our recommended mortgage brokers, Redham from Confidence Finance. Before that, we had Q&A. Then Stephen, who's one of our recommended accountants, took us through a dive on buying through different entity structures and taxation, which was a bit of a further elaboration on what I already cover in week 6 of the course, etc., etc., etc. So I just want to point you that this resource exists and it could really be very, very valuable, especially when you go through what other members have been doing, and then you can reach out to them in the community forum. And here's the community forum. When you log into the course using your username and password, of course, you'll see the course and also the community forum here. and there's thousands of questions and answers, and I highly recommend you ask lots and lots of questions. There's no such thing as a silly question. So, after you've perhaps done a bit of a research to see if someone else has asked that question, whether it's about negotiation, renovation, a particular suburb, or what have you, please go ahead and ask these questions that you have. And here, of course, you can tag the other members that you might have heard from in these mentoring calls and follow up with them. They're all too happy to help. All right, so those are two very important resources that I think everyone should be spending some time on. And the process by which we'll run today is we'll start off with a member deal. Um, Anyone can ask any questions at any time. You just open up the chat, the Zoom chat, and put in your question. If you're addressing it to me, just put my name in. Or if you're addressing it to our member today, put his name in and ask him, and I'll read them out. You can ask about any week of the course as long as you've done that particular week. And if you can limit it to perhaps one or two questions per person to give everyone an opportunity. If you're asking about a particular suburb, try to be specific, which factor you're not sure about, because of course we can't go through, entire suburb analyses on the call today. And lastly, please don't be shy. I'm genuinely here to help you, like I always say. So if you have a question, you're not sure whether to ask it or not, just ask anyway, because chances are the people are probably thinking the same way. All right, well, let's get into it. I'll just check if Rhys is on the call. Rhys, if you're on the call, would you mind unmuting yourself? All right. Well, maybe Rhys isn't here yet, so he's the one that is going to be sharing his four deals today. So let me just pop him an email, and in the meantime, I'll take your questions. All right, guys. So I've just sent Reese an email. While we're waiting for him, I'll just, instead of doing it at the end, I'll take your questions at the start. So I'm opening up the chat box. And the first question is from Ben. He is saying, PK, in your videos, you have mentioned next Perth, what, or next Perth. What is it? So I don't think there's necessarily like a single city that I'm envisioning that's going to all of a sudden, in a year's time, start booming by, double digits per annum or even more than 20% per annum, like Perth has. But, Townsville is very much the next cab off the rank where we've been investing for a while. And if you go back and watch the last two mentoring calls, under 500K and over 500K, then there's lots of opportunities. We went through more than, I think, 130 suburbs. So there's a lot of opportunity there for everyone. And really the way to understand which is the region that is likely to do the best is to see, okay, well, of the 130 suburbs, where was there the biggest cluster of strength, the biggest cluster of suburbs where they're all quite close to each other and they're likely to do well. So, of course, we've talked about Queensland at length, but sort of the Maitlands area around Woodbury is showing a lot of strength. If I'm remembering back to what we discussed last week, parts of Bendigo, parts of northern, sort of northwest Melbourne, not in a ring, middle to outer ring. Now, I'm not saying particularly for Melbourne that that's going to start growing by double digits this year, but these are all the next cabs off the rank, so to speak. And there's a lot of we went through a lot of detail in the last 2 weeks on the mentoring call, so please go check that out. Ben, you're asking PK, does an SMSF have to pay land tax? I'm pretty sure you can't get away with not paying land tax in Australia under a trust structure. So yeah, you definitely have to, but you can always confirm as well. One second, Rhys just emailed me. Let me just reply. Okay. He should be on his way soon. Next question is from Arjun. You're asking, hi PK, if we are paying land tax, should we include this as an additional expense when calculating the cash flow position of a property? It If so, I imagine it should be incorporated as a post-tax expense. So land tax is incorporated in the overall in our portfolio budgeting tool. It's in the sort of summary tab. There's a row or a line item for it there, and it's actually tax deductible. So the way the formulas work in that portfolio budgeting tool, it's not attributed to a particular property, because land tax may be spread across multiple properties. It's more at a portfolio level. For example, one property, if it's within our land tax thresholds, it doesn't incur any land tax. But then if you exceed that, then it's not like per that property that the state sends you a bill. It's because of your overall portfolio holdings in that state or territory. So that's why it's in the summary tab as opposed to an individual property tab. But it is tax deductible. And if you put it into the right row in the portfolio budgeting tool, then that tax deduction is already calculated. Yeah. So it's a tax that's also tax deductible. All right, cool. I think we have Rhys joining us. Now, Rhys, can you hear me?
Well, yeah.
Okay. Can you hear me, Rhys? I think you just unmuted yourself, but it was
Oh,
a bit hard for us to hear. Is that okay?
have you got me?
I got you. Yeah, I can hear
How
you
you
now.
going?
All right. Well, thank you for joining. I just did the introductions before, and we were just about to get into asking yourself questions, and I
Yeah,
realized
yeah.
you weren't actually on the call. So I just took some questions
Yep.
and here now. So are you ready to go now?
Yeah, yeah, no, go for it. Ready to go.
All right, cool, cool. Well, thank you for joining. I really appreciate it. I got an email the other day from Rhys, everyone, and I was surprised. I don't know why I was surprised, but I was surprised because he's done really, really, really well for properties in the last couple of, and they're all really terrific properties. And so I sort of asked Rhys whether he'd want to come on and share his lessons learned, share his experience, and share sort of his knowledge from having gone the distance with everyone on the call, just to inspire everyone and actually give, practical experiences that he's gone through. And he very kindly said yes. So on behalf of the community and of course myself as well, Rhys, thank you for making time.
Not a problem at all, PK. Where would you like me to start?
So let me, I think the best way, I'll just read out your email that you sent to me
Yep.
and paraphrase it because I think
Yeah, yeah, yeah.
that's the best
Good
introduction.
one.
And
Go for it.
then I'll sort of ask you some select questions, and if you have other things that you wanted to share, you can do so
Yep.
too. But basically, Rhys has just bought his fifth property. That's for using the course.
Yep.
The latest one was in Mackay.
Yep.
And he purchased it for 515. The rent is 650 on an 840 square meter block. This one's really cool, and I'll ask you some questions about it in a second because
Yep.
Rhys managed to talk with the town planner. You can actually do like a dual lock on it, which
Yep.
makes it maybe 20 to $30,000
When-
positive cash flow.
Yep.
Before that, he bought in Caversham last October for 565. Value is now 720, which is crazy. And probably what's crazier is the rent is 780 per week. Before that, he bought in Maddington in Perth in
Yep.
2022. I think that must have been his first property through the
That
course.
was my first, yeah. End of
Yeah, the
20.
first property, your first property through the course. And that one was 470 at the time, now 710. And then also this year in May, bought in Beckett Court in Aurelia in Mackay,
Yep.
520K, 650 rent, 800 square meters. And there's a lot of numbers and everything, but I just wanted to read that out because, and to do it justice, because each property is growing, whether it's 2 years or very quickly. Each
Yep.
property's got incredible yield. The land sizes are great, value add potential. And we'll get into all of that, but perhaps Reese, let me ask like a cheeky question. Do you have like some sort of advantage over everyone else, or how you like by virtue of what you do, like in your 9 to 5, or like what do you do, and what was your experience in property before this?
So yeah, look, I've always been interested in property since I was young. I'd read a lot of books. I read like, is it Stephen McKnight's book, 300 Properties in How Long, and got all that, but never actually didn't know where to start or what to do, or where to actually get in. And I ended up buying. Yeah, I bought my first property. I'm from Brisbane, so I'm from Brisbane in Manly West, and renovated that in my late 20s, and then yeah, luckily I bought down in Manly, literally just before the COVID boom. So I mean, you couldn't time that any better. Which that suburb's done remarkably well since through COVID, and still going.
Yeah.
Um, and yeah, didn't know where to get in. Was reading a lot of books, but they never really gave you any. You'd finish a book or whatever, and it wouldn't really tell you anything where to start or what to do. And then yeah, came across your course, and yeah, jumped in super quick, and got the first property over in Maddington for a job. Got a commercial tiling company here in Brisbane, so we do airports and shopping centres and all that sort of
Hmm.
thing. So I am in the, say, building trade per se, so I know what to look for in a house and stuff like that, which gives me a little bit of an advantage, or a little bit of confidence when you're looking at a house, I'd say.
Right, right, right. And so what was the experience like? Because you bought basically all of these, if not interstate, or at least remotely. Like, did
Yeah,
you did you have any apprehensions because you have some expertise in looking at a house? Did you have any apprehensions kind of outsourcing that to like a property manager and not kind of being there physically to walk through yourself?
yeah. I mean, the ones in Perth, they were bought sight unseen. I mean, what the Perth market like. You just don't have time. But if you've seen the houses, I've looked for good. They're good, strong. They're not super old. I haven't gone for too run down, especially when I'm not seeing them and I'm not there to inspect. And if anything really goes badly, go wrong, you can use the property manager, but will cost you money in renovations and all that, which you're not expecting. So I did look for good. Not necessarily, they're not new houses per se, but um, what I deem to be good quality.
Right, right, right. Um, and I mean, let's go back to this one in Maddington in Perth. It was 2022.
Yeah,
Maddington. I mean, just zooming out, I just want to understand your mindset around Perth because there are many other locations right now which have grown somewhat, much like Perth had grown somewhat in 2022. But there's still a lot of noise in the media and other places that sort of say Perth's not going to do well because of this reason or that reason. So even now, there are some locations in other parts of Australia where they've risen a little bit.
yeah,
The data's good, but perhaps people on this call are second guessing themselves because, let's say, close to Newcastle, Maitland, some suburbs are popping
yeah,
up
yeah.
recently in terms of strength and data, but they're sort of saying to themselves, "Oh, look, it will never do well because of X, Y, or Z reasons." How did you sort of block the noise and just go ahead and buy these 4 properties with kind of laser precision?
Well, I mean, going back 2022, I mean, Perth was starting to take off, and after I'd started doing a course, and I think I'd put an offer down on that place. We're only about halfway through. I was only about halfway through the course,
Hmm.
but I was just so eager to buy. I mean, I'm not scared of pulling the trigger, so I do have quite a. I don't like to overthink things. Things are quite simple to me in the way of started doing the course. You saw properties moving there, you saw the data, assessed everything, and it was more a matter of how quickly can I get in because I don't want to miss the boat. If
Yeah.
you go back to if you go back to 2022, even then, it's funny people saying, "Oh, it's overgrown," and it's grown a lot more since then. But going back then, people were, "Have I missed the boat back then?" Because people have missed out. It grown 100,000 since 2021, and all of that. So they've been saying that. They've been saying that every year. So
Yeah.
I've seen you said that a few times. There's never a better time than now, because the prices just keep moving. So
Yeah, right, right. Makes sense. And like, are you sort of quite a data orientated person because of what you do for a living otherwise, or how did you find was it easy to understand the course, and what were like the biggest challenges that you faced in really going through the course and understanding it? And I'm asking this question because perhaps there'll be other people that are going through the course and they're like, oh, this is like really difficult, or the data is doing my head in. How did you overcome all that?
yeah, no, I didn't think there was anything too that didn't make sense. It was all super clear, and you start going the numbers, going through DSR, then doing your own due diligence. Especially Maddington at the time. I was trying to buy up at Clarkson, but it was just way too hot. And then we came down. I know everyone was talking about Thornley at the time. It
Remember
was
that?
super
Yeah.
hot. There was buyers agents everywhere. It was super hot. So I ended up looking for that ripple effect and looking for properties, for suburbs around. And Maddington, I was the only offer on that house, luckily, and I put a good offer in and got it. But yeah, it was more that was the reasoning behind sort of that suburb. And I think the biggest thing in the course is just not to overthink everything. I mean, you can analyze the data and go through everything, but you need to start getting in these suburbs, looking at the suburbs, putting offers in, and making action, and get knocked back, and getting to know the agents, and all these little things that piece together. And especially when you get into suburb and start talking to the agents, you get to know what the suburb's doing, how quickly it's moving, and all that sort of thing. So
Right, right. Did you put in like how many offers would you have put in per successful property that you bought? Like, so you bought four. How many offers would just to kind of get a benchmark for other folks?
yeah, no, I was definitely putting in the first time. Yeah, it was 3 or 4 offers went in on other places. I tried to buy in Townsville before the third property, and I just couldn't get in. It was just so there was 40 offers going down, and that's what led me to Mackay
Right.
um, at that time. So yeah,
Okay.
but it's funny. It's the relationships with the agents, putting the offers down, but sometimes can get you the next property. That's what I found in both the Mackay purchases. They've both come from uh, the one I bought in Uralee. I'd put an offer down on one, unsuccessful, and he'd actually rang me back and said, we'd have a contract fallen over from first home buyers. Would you like to put in an offer? And then I swooped in, put a good offer in, and it's more a matter of acting quickly.
Right, right. And guys, if you have any questions for Rhys, please do just open up the chat box and type in your questions, and I'll read them out for him. One from me was this one in East Mackay, which you got for 515.
Yeah,
You've spoken to a town planner, and a dual occupancy can be put on it, increasing the rent. For anyone who's kind of like brand new to property in general, could you just maybe explain? Like, did you already know or think that you could add value to this house before you purchased it? What, that's, I guess, number one. Number two is like, how did you go through the process of contacting the town planner? And how
yeah,
exactly in free can you get extra rent? It's kind of basic questions, but just
yeah,
stepping it out for
yeah.
folks.
So I'll go back a little bit to the third purchase was in Mackay as well. I actually bought the first 2 properties purely using equity. I didn't use any of my own money. Oh, sorry, all 3 properties. The last purchase, the only time that I've used any sort of cash. So anyway, as you know, cash flow can get very tight when you're using equity. Interest rates are
Yeah.
rising, and I figured out I can't just keep buying like this, even at 6% yield. I've maybe got one more at me, and I'm terribly negative, and I'm just going to have to wait it out. So I realized I had to go to some cash flow properties. So I mean, the third property is an 800-meter block. I'm getting quotes off builders as we speak to get a granny flat put on that, which will
Hmm.
make that property probably around 5 grand positive, something like that, once the build's done.
Hmm.
Um, from being 5 to 8 grand negative using equity. So yeah, I realized very quickly that you've got to do some cash flow properties with also, good buy and hold properties. So, and then yeah, I got the second one, and that was an 840 block. And I started using on the third property, I started ringing town planners to know, hey, could I get a granny flat on this? What can I do? And you could use them. I was using them like you use the property managers in the course. So they would actually do their own due diligence, check the sewer lines, how easy, what can we do, where can we build, and all this. And they'll do a quick, summarization, and sometimes within the day, which I could get, in worst case a day or two.
And this is a
So
like private town planner.
private town planner, yeah, this isn't the council. So,
Yeah.
and on this last one, they said, yeah, you can keep the existing house, and yeah, put a dual occupancy on the back, 840 block. It's got a good driveway up the side. And yeah, I'm currently working with the town planner now, and also to getting quotes off builders, and looking into see exactly where we're at with costs.
Right. And are they doing all of this for free, like before you actually go ahead with them, or is there some sort of engagement fee that you have to pay them?
No, no, they'll do the initial just spot check and see
Mhm.
how it all, if what it can be put, and they'll give their advice of what can go on it. And then obviously, if you want to go further, that's when, yeah, you have to start paying and you engage.
Right, right, right. I mean, there's a question here from Pyle, follow on the same topic. They're saying, "Hi, Rhys, can you give us a bit more information on the dual OC opportunity? I understand that it is expensive to subdivide in Mackay, $60,000 to get all the paperwork in order. What's kind of like your total budget for this sort of operation?"
Yeah, well, with this one, actually, you can keep it unsubdivided and put the dual occupancy on out the back. So you say you have a 3 bed, 2 bath on one side, 2 bed, 1 bath on one side. And yeah, so you're keeping subdivision costs out of it. So you got three tenants over the property. And yeah, what was I going to say? As you know, rents are super, super high. So you're probably looking in the range of 1,100, 1,200 for a dual occupancy on that. I'm getting quotes as we speak. So I'm looking up, around 650, 700 max for the build. So if I can get it done for that, the numbers will stack up. Then I think it's, 650, 700 to get 1,100 return, 1,200 return. I think it's well worth it.
And that going to be that dual is going to be even bigger than the house up front?
It'll be, I think it'll be a similar size, maybe slightly smaller. Yeah. Yep.
Okay, okay, okay. It's interesting. How do you, I mean, I think it's fantastic and if the site allows it, then why not? How do you sort of think about it in the context of your long-term strategy in terms of, like a dual lock maybe more difficult to sell in the future
Yeah.
because some owner occupiers may not like it, although many may still love a dual lock given massive housing
Yeah.
shortage, you've got more
Yep.
rooms, etc. Or is this one that you've sort of planted in your mind to say, look, I'm never selling this thing, hugely positive cash flow, it's going to go with me to the grave kind of thing?
Yeah. Yeah. No, the second, it's definitely one you want to hold on to, especially with Mackay. You've got high rents, and yeah, it's definitely one to hold on to. You look to sell maybe the other ones that are easier selling, maybe nicer house, all those sort of things, and a bit easier to get rid of. Yeah, that was definitely the mindset.
Right, right. Um, cool. And you mentioned like, before doing like a granny flat or dual lock, of course, with rates where they are, the cash losses sort of do rack up as you buy
Yep.
more and more property, and there's only so far you can go. Um, how are you managing things from a borrowing capacity perspective? Like, is it by virtue of you having a pretty healthy income, or have you done anything more funky in terms of expanding or maintaining your borrowing capacity?
Yeah. So, I mean, I do have quite a good income. Got my own business here in Brisbane, but I think that the first purchase was structured personal, but then the rest have all been trusts. Under me, I've got me and my wife under trust name. So yeah, all those last three purchases were all under trust. So yeah, I have really tried to set it up, and hope I have done correctly from the start and making sure there was no early mistakes made. And that's one of the things I really took in the course is make sure good broker. I've actually just got a new accountant who I found. I put a post out on the group and
Oh,
found him in
nice.
Brisbane. So that was really good, and he led me to a new broker. I've just changed brokers, upgraded brokers. So I'm always looking at that side of things, and yeah, making sure I've got the structuring of all the properties correct. From day one, because I do want to buy quite aggressively, and there's just no room for error.
Yeah, yeah. And like you've got five properties now in total.
Yeah,
Um, I don't know if that includes your principal place of residence or
that's
not as well.
yes, yeah,
Yeah. Okay, so five in total. I think you're looking to go another two
yeah,
very soon in Melbourne and like around the Bendigo
yeah.
area potentially. I mean, after that, is your sort of mindset, all right, seven's good. I'm just gonna like sit on this for many years, or are you going to continue trying to expand after that? And like, what's your goal, let's say in 20 years from now?
Yeah, so no, a bit more aggressive than that. I would like to have maybe 15 to 20 properties in 5 years. That's
Okay.
the goal. Me and my wife would like to. We've just got a 2 year old son. He's actually two today.
Oh, happy birthday to him.
I actually on the first funny story on the first purchase in Maddington, I got the call accepted that I got the property. I was actually in the emergency room on today on his birthday, so
Oh my
he was
God.
being born. So there's a little.
Wow, he's
Um,
a lucky kid. He's bringing lots of prosperity to the family.
I'll definitely teach him property. Yeah. But yeah, we would like to buy quite aggressive, work quite hard, and we don't want to work forever. And we've got plans to move to Tasmania in maybe 5 to 10 years. And oh, I lost you.
We can see.
In you got me.
Yeah.
Um, to move to Tasmania in 5 to 10 years and live quite a simpler life. Um, was that the goal? So we want to do that while our son's quite young, and we can spend time with him, exploring outdoors and giving him a good life, and not working, around the clock. So that's
Yeah.
that's that's
Yeah.
passion.
No, I love it. I love how the goals are like very uh, of course, everyone has different goals, but it's really cool when you have updated goals, and the parents are working hard now with delayed gratification to build a better future. So
Yeah.
that's really pleasing for me to hear. There's some more questions here in the chat. One is, I don't know if you already covered this or not, but Shehan is asking, "Hi Reese, wondering if you're building a granny flat from scratch or buying ready-made. Also, any reasons for your choice?"
So we know I am building from scratch. So I've gone through and got the designs, got everything done, and just looking to engage a builder now. So I find that just to be a little bit better quality, and hopefully trying to attract, a little bit nicer tenant.
Yeah, 100%. Ben is asking, "Hi Reese, did you buy one property like per trust or like multiple in the same trust?"
So I've got two. I've got a. I've got one in Perth and one in Mackay, which are in the same trust, and then the last one is in its own trust. So I'm definitely watching what I'm doing with land tax and making sure I'm not getting too many in one trust, because you can sort of run yourself into a little bit of trouble.
Yeah, yeah, for sure. Um, yeah, and just so everyone's aware, like if you are going to buy multiple in the same trust, maybe it's a good idea to leave some capacity in the same trust. For example, you might buy one in Queensland and then one in, yeah, maybe Victoria is not the best example because they flog you regardless, but in another
Yeah.
state, as opposed to like three or four in the same trust in the same state where the land tax could be quite heavy.
Yep.
Mahesh is asking, I don't know if you're comfortable sharing this, Reese, but
Yeah.
what's the accountant's name?
I might not say that. He might not. He's quite. He might not be comfortable with
Yeah, no, that's what I asked as well. Fair enough.
that.
Next one. Hi, Reese. What factors did you trade off in this hot market when choosing the suburb or property? So like, whether it's at a suburb level or at a property level, were there some factors where you're like, oh, the course the course wouldn't really be crash hot on this property or this suburb, but I'm gonna trade that off because of whatever other reason.
Yeah, yeah. So, I mean, I'll say I'll go to the region. What was it saying? I mean, the region of Mackay. What led me there was it's got a lot of nice flat, big blocks. When I was looking for granny flats, but I would definitely look for slightly cooler suburbs that were easier to buy. You know, rural view around there, and then look around that. I would definitely, especially buying in these hot markets, it's so tough, and you don't have the option of the perfect property or in the perfect suburb. It just doesn't exist. It's more what's coming up at the time. You know what opportunities you're getting with the agents, looking in the right suburbs, and then I mean I bought in Lee, but at the time when I bought, it's gotten quite hot now. But at the time it wasn't that hot. But I found it had really good, had really good bones. It had really super low renters. I think it's 26% renters on DSR, right out of the flood zone. But was a little bit cooler in demand supply, so that didn't deter me. Yeah,
Okay. No, that's a really good call
if that
out.
answers.
What do you, I mean, this is kind of getting technical. I don't know if you can remember off the top of your head, but um how cooler was it in terms of like, did you flex stock on market by another, I don't know, 0.5 percent or days on market by 30 days? Or do you remember anything that you did like that?
I remember the days on market were a lot, well, not a lot higher, but they were higher than say your Beaconsfields, your Rural Views, all the other suburbs sort of around that were taking off at the time.
Hmm.
Um, and it actually hadn't moved a lot. It hadn't had a lot of growth, but that's something I liked because it's saying it's got room to move. And if you look at early now, it's actually probably one of the hottest suburbs in Mackay, which
Yeah.
was, I don't know if that's luck or good timing. Or...
No, maybe luck has a part to play, but I think it's predominantly great timing and taking action on data.
I
Um,
actually steer away from, you see in the chat and you see, in your hands on the ground and you see all the suburbs that are just super hot. I actually try to stay clear of them and try and get maybe a little bit more of a discount or a little bit better deal for the suburbs surrounding, but making sure they've obviously got the good factors, and still stacks up.
Yeah, no, using the system with dexterity, I think oftentimes those are where the better deals I found where it's easier to buy in now. And then, in the future, you get that wave anyway, but you've just made life a little bit easier for yourself in the moment. Next question, Kevin, was that Aurelia? Yep, that was the one, and the other suburb was East Mackay, I think.
Yep.
Um, Ravi saying, well done, Rhys. All your buys look super cool. Congratulations. Thanks for your knowledge and experience. Good stuff, Ravi. Mihiran is asking, Rhys, did you call the town planners before you put in the offer? Um, like every time, even if there were multiple properties in your kind of consideration?
Yep. No, I'd contact them quickly before. I actually struck up a relationship with one of them, so he was able to look at that. If I rang him in the morning, he goes, "I'll get back to you this afternoon. Give me a phone call and just go through what we can do on it and that sort of thing." So that's again, um, building that relationship. But
Hmm.
I would call before, but in a perfect world, sometimes you don't have time. You've just got to make the decision. You can call the council, and do your own quickly due diligence. You can go on Google Maps and map out, can a granny flat fit, where you can put a driveway, and sort of do your own due diligence as well. And I mean, even if the granny flat couldn't got these houses where the granny flats or dual occupancy are going on, even if they don't stack up and for whatever reason they can't happen, they're still good purchases. They're still good long term holds, good areas, good solid growth. So I don't just buy it. If that falls over, then it's not a good buy. So
Right. Are you kind of now that you've had a taste of the more value add type properties, is that really where your focus is now in Melbourne and Bendigo? You're not going to settle for like your standard height. If you want granny potential, you want subdivision, or you want dual lock potential. Is that your where you're leading, or are you not caring so much?
No, actually, I mean, I'd like to do one every, every 3 to 4 properties, maybe do one value add. But I mean, that's not where you're going to make, the capital gains and everything. The capital gains are making in the acquirements of just your foundational properties and getting as many as you can under your belt. So, no, that's definitely not the goal. We're looking at some townhouses in the Melbourne region. I know you've been talking a lot about some spots in Bendigo that are really interesting. So it's more just buying up in these spots, and the granny flats is purely just to manage the cash flow and be able to keep buying. Because as you know, you can run into trouble. There's only so many you can do before, depending on what cash you're putting down and all that sort of thing. So no, it's definitely to buy as many foundational properties as you can to further sell down in the future, because I believe that's where the money's to be made.
Right, right. And one question's just come in here from East Mackay comes in a flood zone. How did you factor that risk in your purchase?
Yeah. So actually, that place is just on the cusp of the flood zone, um, which is probably going back as one of the factors I had to give up slightly. But I really love this. Most of East Mackay is in a flood zone. So
Hmm.
that was the factors I had to give up. The insurance is a little bit more, and I did do a lot of due diligence. I asked a couple other agents and people on the ground, and one of the better flood zones, if that makes sense.
Is a flood zone like in the actual going into the house itself, or is it just in like the front yard or the street?
Yeah, the property looks like on the map it's about half half, but the house it's a 2 story and it is built up. The house is
Okay.
mainly upstairs, so you just got to make sure when you do these builds, you do a granny flat or dual occupancy, that you have allowed for any long term thing. But I don't think East Mackay floods say as bad as suburbs like it. I know North Mackay floods worse, and a bit further into the city. So
Yeah, and just to add to that as well for you, Aman, sometimes these flood zones they can be quite conservative, in the sense that it's like never actually flooded there. And I'm not saying that means you can just close your eyes and go ahead and buy there, but it's quite important to triangulate. You might want to call the council and get their insight,
mm,
or you can call like a property manager, like a local property manager, and just get their insight as well. I mean, they might have been working there for 10, 15 years. They kind of understand, where it is actually more vulnerable or not. And then the last thing,
yeah,
like Rhys just mentioned as well, just call your insurance company, and just how much extra the premium is. And then you can get a gauge from them as well. You can just ask them, hey, is this in a flood zone according to you? How much more of a premium is it? And then you can make a considered choice. Like in Rhys's case, you sort of saw enough benefit on the other side of the scale to say, yep, even though a bit of a flood zone, there's so much more upside value potential here. I'm happy to trade that off. Or for you, if you're perhaps super risk averse, it may not be fine for you. So it's kind of an individual choice, I think. Like a lot of clients, they buy where the property itself isn't on a flood zone, but like the front yard is, and they're like, well, like who cares if the front yard goes under the water? My property's going to be okay. But then some clients aren't okay with that either. So yeah, that's another way to look at things.
and just on that, PK, especially buying in central Queensland and North Queensland. If I mean, most of these towns are under. If you go to the flood maps, most of them are underwater. So it's definitely doing a little bit more due diligence, especially in North Queensland, because I mean, especially towns with a lot of flood areas, and just doing a little bit more. How badly does it flood, and really finding out the ins and outs of that suburb and those streets.
Yeah, 100%. No, well said. And perhaps last question for me, Reese, like let's say someone's brand new into the course right now.
Yep,
They're a sort of similar person to you were 2
yep.
years ago. They
Yep.
they want to go hard. Um, what's perhaps your best advice or top advice for them having kind of gone through it yourself and had success? What would you say to your former self to make your journey even easier or perhaps even more fruitful?
I wish it would have started sooner. No, but I think the most important thing is get yourself educated, get the course done, understand it, but then also, I mean, experience going out making offers. Don't be scared to make offers. Speaking, just I mean, I'd be calling uh I'd be calling agents, 10, 20, 30 agents a day, just calling when I'm driving around for work and making the time and just getting to know the agents and build the relationships and that's how things come about. So definitely getting down and getting that experience, making a few mistakes, and just going through the process would be my advice. And as you get along, you're to two, three, four, and five, hopefully, and beyond, and you just get more and more experience and confident and knowing what you're looking for in a property, suburb, and it starts to come a bit more naturally per se.
Yeah, yeah. No, no, well said. I mean, there's really no replacement for doing the work. You just have to do the work. It's almost like you have to force yourself, not necessarily you, Reese, but I can talk for myself. Sometimes you just have to like lock yourself in a room and put the phone next to you and laptop in front and just do the work.
Yeah,
Even if your mind tells you, I don't want to do it, or,
yeah,
then you just do it. You just fight your mind because the fruits are there just waiting. So no, it's incredible what you've done. And of course 2022 is when interest rates started rising and so many
yeah,
people they didn't invest in property because they thought it was going to go down, but you did the opposite. You've made hundreds of thousands of dollars in equity, I would say.
yeah,
And overall your cash flow position's pretty healthy because of,
yeah,
these sort of dual lock granny things that you're doing. So yeah, I wish you all the very best. I know that you'll continue to email me and ask questions and things like that.
yeah, absolutely.
And yeah, I'm very grateful that you're part of the community and you've taken some time out to give back today as well.
No, I just want to say thank you as well for introducing me to the course, and I actually really enjoy the group chat online. It puts property in my face all day, and people just talking property and seeing it all. It's great because uh, I actually don't have a lot of people don't want to hear about property or talk about it, and I love to talk about it. I love to talk about people, and just seeing the chat going on, and you see it, and it's really good. Everyone's sort of with this, in the end, everyone has the same goal and aspirations and looking to do the same thing. So no, I want to say thank you.
No, amazing. And guys, if you got value from Rhys, please do pop him a congratulations or some kind words in the chat. It's we're really grateful. We have amazing people in this community that
Yeah,
not only on these calls but also in the community forum, and that they answer so many questions. They get nothing out of it. They're just trying to give back and help everyone
yeah.
else out. So it's really cool to see. So thank you so much again, Rhys.
No, awesome. Thanks a lot, PK.
All right, guys. Well, in the last 10 minutes, I'll just go through and answer all the questions that were directed to me, that I haven't gone through so far. So I think where is Jay is asking, hey PK, at the present moment in Brisbane, Queensland, what would we consider as a higher and an average rental yield? Oh, that's a good question. Like in Brisbane, I think it's very difficult to get above 7% or even 7%. That's more the territory of kind of regional Queensland. So I would say if you can get something close to a 6%, like that's at the very high end. And then, you don't really want to go under 4.5%. And of course, you want to make sure you budget. I use the portfolio budgeting tool to make sure that even 4.5% yield is okay in your family household circumstances. But yeah, I mean, if you're not earning huge money from an annual cash flow perspective, you really want to be avoiding buying properties with under 5% yield because you can always go somewhere else and get them. So you don't have to stick with Brisbane. So I think that's probably how I'd answer that question. Um, Hi PK, how quickly after buying in a hot market, Townsville, should we get a valuation done for equity release? So I think you can just sort of monitor the market yourself, and after 3 months, you can go back to the bank. And I mean, chances are in Townsville it would have gone up many tens of thousands of dollars in 3 months. Of course, provided right suburb, right property. So yeah, and then you can get it refinanced. Regina, hi PK, on week 5, negotiation, formal letter. The last sentence is, please can you send through the contract for sale so I may submit a formal offer to be considered by the vendor. What does it exactly mean? What should I be aware of? So, like I say in that module, Regina, it's only when your offer is on a proper contract for sale, which is a like a multiple page contract for the actual purchasing of the property. It's only then that the agent, the selling agent, takes it even more seriously and is actually obliged to at least present it to the vendor. So we don't negotiate verbally, like I mentioned in week 5. We start, of course, we have conversations and things like that with the agent, but we put our offer via email. And then we ask for this just to show how serious we are. It comes across as we're a professional buyer if you use the terms that we use, and then the agent will just take you that much more seriously. So all of what I've just said is also covered in that week 5 module. So maybe listen to it again, but hopefully this also makes sense, Regina. Tariq, is block of units a good strategy for positive cash flow and to preserve your borrowing capacity? I've actually done a whole YouTube video on block of units. It's a great strategy, uh, but it has its downsides. For example, the LVR position is much lower. The banks require higher deposit, generally speaking, because it's categorized as a commercial investment from a bank or commercial loan from a bank's perspective, oftentimes. There's much more maintenance to be done. The insurance premiums are higher. There's more tenant attrition. So I generally find block of units, I mean, it's great. There's nothing wrong with it. The yields are a little bit higher normally, but these additional expenses erode those higher yields. And then because the LVR position isn't as great, then it's more difficult to scale your portfolio. But if you can find it's very rare, but if you can find a block of units where, of course, the data stacks up as per what I teach in the course and the property factors stack up, and it has not been strata titled, then there's some value opportunity. You can buy that block of units, strata title it yourself, which is basically, a process of paperwork to individualize each of those units so they can be sold individually. And then as soon as you strata title it, each of those units generally go up in value. It's hard to put a generalization on it, but normally each of them go up by at least 50 to $100,000. And so there's some great equity to be made in that way. But I've done a whole YouTube video with much more comprehensive answer. So you can just put in block of units, PK Gupta, and keywords in YouTube, and it'll come up. Um, Hi, BK. I joined the course in April this year. I'm finding it difficult to apply the course in real practice. Can you give me some suggestions, best way to execute using your course? I'm very new to investing. So it's good that you say this, but it'll be helpful if you let me know which particular part you're finding it difficult to execute. For example, is it the strategy development? Is it selecting suburbs? Have you already selected suburbs but you can't find the right properties? Is it you found the right properties but you can't value them? You're missing out on your offers, etc. So the more specific your question can be, if you put it into the community forum, like just be really specific. Which like exact next step are you finding difficult? Then I can help you with that. Of course, the alternative or in addition, you can just like uh, um, just like Rhys has shared today, there's literally hundreds of different members over the years on these mentoring calls, which are all archived, that have kind of explained how they've done it. And so you can also go and watch a bunch of them to gain practical examples of how they overcame not being able to develop a strategy, how they overcame borrowing capacity hurdles, how they overcame constantly missing out on properties. Maybe they weren't valuing it correctly, and therefore that was a tweak that they needed. So yeah, hopefully that helps. But be specific, and I'm very happy to help you. Prince, hi, PK. Any Brisbane suburbs where growth's still left? Yeah, I covered a couple of townhouse locations in Brisbane over the last 2 weeks on the mentoring calls. So please go check those out. Nay, how far should you go to get your next property? Currently on 6.54% interest only, and to get another borrowing capacity of 600 for 8.59, would it be worth it? So I think your question is, is it worth paying a higher interest rate to be able to get another property's borrowing capacity? And I think the way to answer this is number one, you don't want to be putting yourself in undue and unnecessary financial pressure from a cash flow perspective. So that's number one, and you should fill out the household budgeting tool that I provide in week one to answer that for yourself. But number two, there's literally dozens and dozens and dozens of folks that I've interviewed on sessions like this in the course um, that have shared how they were happy to pay a 2%, 3% interest rate premium. They may have gone with a second tier, third tier lender, Pepper Money, First Mac, etc., because they knew that the growth would come. All right. And after that growth came, rents rose and the LVR position came down. Then they refinanced away from that second tier, third tier lender back to a major lender like a big four bank, and therefore the interest rate came down and they were happy. They were glad that they did that, because had they not done it and not paid the additional, let's say $5,000 additional interest payment for that first year, they wouldn't have made that $200,000 capital growth. There's pros and cons. First of all, there's no need to do anything that keeps you up at night. But the other perspective, depending on your risk appetite, is making sure you understand it from a more holistic strategy perspective, and don't miss out on those gains either. Actually, I'm having difficulties finding flood maps for Townsville on the council website. Could you recommend any free resources? Yeah, absolutely. So, like in the community forum, and I'm not just sort of palming you off here, but if you're in the community forum, if you just put in keywords Townsville flood map, there's literally like so many like not so many sources, but the sources are there. There's members discussing them, screenshots, links, all that sort of thing. But if you have difficulty in doing that, Ashley, then just ask me in the community forum saying, hey, can you please share the links for Townsville flood maps? And I'll reply and give you the links. Amina, hi PK, is there any locations to buy for under I assume you mean $400,000? Yes, so last 2 weeks ago, actually, we covered which date was that? On the 20th. So if you go to the wrap-up section of the course, on the 20th of August, we went through the top locations across states and territories under 400K and under 500K. So please go back and watch that, and there's a whole hour of analysis on that. Okay, Vanya, sorry, I think you've answered Jag's question there. Sarah, I was told in Queensland you can't have a granny flat rented separately to the main house. Is that not the case? No, that's granny flat rules are council dependent, not state dependent. So there are some councils where it's more difficult to do that, not possible, and some councils encourage it. It comes down to council by council. All right, that one was answered. Bradum, hi Pika, I've got a principal place of residence house at Cobblebank, Melton. Is it better to sell it and go on rent vesting, or should I rent it out for a better time to sell it, as currently the price is very low? What's the outlook for Melton in the next 3 to 4 years? So at a high level, and you can ascertain using the same system that I would to understand Melton's outlook. But some of the short-term factors are pretty strong in terms of like days on market, stock on market. It's not terrible, but there's still a lot of land. So if you go to other factors like building approvals and developer land supply, etc., that kind of balances out that sort of initial optimism that I had. So I don't think places like Melton are the best for investment purposes. Would we be selling a house there at the moment? Look, you'd really want to make sure you understand rent vesting. You really want to make you speak with your mortgage broker and understand that if I sell this property, what is my total borrowing capacity left now that I don't have that liability? And let's say that is, I'm just making this up, $1.5 million. So that's three properties at roughly 500K each. Then you sort of think to yourself and with your family, okay, I could buy three properties, investment properties, renting the whole time. And then in how many years would I need to delay this gratification to be able to buy another place wherever I want to? And if your borrowing capacity is only 1.5 million, then let's say that $1.5 million portfolio, just using round numbers, doubles in 7 years, just using, just very high, long-term averages here. That's 3 million. So, 3 million portfolio value. You still got $1.5 million of debt. That's 1.5 million dollars of equity. Whether you refinance that or whether you sell, is that really getting you your dream home in Melbourne in the future or wherever you want to live? Or is that still not cutting it? And therefore, is the whole exercise a bit futile? See, my approach on rent vesting is quite practical. It's not that everyone should be rent vesting. Rather, rent vesting makes a ton of sense for people who simply can't afford where they want to live. But to sell your house and actively go on a rent vesting strategy needs a lot of thought. So I think you should consider all these points and ask me for more questions as well. You can email me and share your sort of personal details, and perhaps I can give a better answer as well. All right, last question, given we're a little bit over time now. Um, all these were for Rhys. All right, there's a direct message that I received here in the chat. Guys, please avoid direct messaging me because otherwise people can't see it. But Pramod, if the DSR tool isn't working for you or giving you any results, then you're probably not using the most updated threshold. So please download the most recent suburb selection system PDF in the download section in week 2. And the updates are reflected in a legend and use the updated thresholds. This was explained to do in the welcome video, the welcome email as well. But if you missed it, please do that and it will resolve your issue. All right, guys. Well, we'll stop it there. If I didn't answer your question, please just go ahead and copy paste it in the community forum, and I'll answer it there. Like I say every single time, I really genuinely want everyone to get amazing deals, just like Rhys has. Like 4 properties, each of them going up huge, big yields, value add potential. He's just on a roll. I want everyone to get such properties. They're not exceptions. Everyone can do that. So to do that, please ask lots and lots of questions, especially in the community forum between these sessions, that then I can help you. Please email me as well if you have specific questions about a specific property that, of course, is private. And email me as well if you do secure a property. I would always love to hear about that. Please don't interact with me on Facebook Messenger or the group or SMS, WhatsApp, LinkedIn, Instagram, X, phone calls, etc. If you weren't here from the very start, please go back and watch the disclaimer because none of this was financial, professional, or personal advice. I want to congratulate once again Rhys. I don't know if you're still on the call for taking time and sharing his experience and wins and lessons. I think this will help all of us a lot. And good luck, everyone. Happy hunting and have a great day ahead. Thank you so much.